If you are a crypto investor, this is how you should navigate a recession. Are we in a recession already? Probably, maybe, possibly. If not already by the looks of the global market, it appears we will soon be in one. Before we talk about how the recession affects the crypto or stocks market, let's first discuss what really is a recession. A recession is a significant decline in economic activity, usually measured in terms of GDP, employment, or some other economic indicator. A recession is commonly defined as a period of declining economic activity spread across the nation, typically lasting several months, though in some cases continuing for years. During a recession, it is common to see industries close down, unemployment increase, and retail stores closing down. However, a recession is not always negative. Recessions have been around for a long time. However, the severity and length vary greatly. Since early 1980, the United States has experienced multiple recessions. The last recession was the 2007 to 2009 recession. How is the crypto market affected by the recession? During a recession, consumer spending decreases, which can have a major impact on the crypto market. The crypto market is very data-driven. If consumers are buying less crypto, then they are less likely to use exchanges. This can leave exchanges and their users with less demand and volume, causing a slowdown in their overall activity. The past data shows that the crypto market is a lot more resilient than the stock market. The crypto market has shown that it can survive multiple recessions and even multiple crashes. The crypto market has also managed to flourish while the stock market has suffered. During a recession, you should be looking for three things. 1. Be sure to diversify your portfolio, as this will reduce your risk. And just like I mentioned already, recession is not always negative. It can provide you with a good opportunity to scoop crypto assets at a very discounted price. 2. Be sure to keep your assets liquid. This way, you will be able to protect your assets from volatility and avoid selling at the wrong time. Don't invest your money into projects that have no utility. The reason for this would be that 90% of crypto won't be here in upcoming years. Lastly, I would like to conclude by saying always be prepared, not surprised. Times like these are very hard, not just yours but near enough everyone's portfolio is in red. If you have spare capital and your favorite crypto is down, then you may want a dollar cost average. If you don't, then worry not to stay strong and hold on till the crisis passes away. Just like after the dark night there comes a beautiful day. You could apply the same case in crypto or the stock market as well. Enough has been said. Until then, stay safe and happy investing.